Good afternoon, everybody. Welcome to the latest webinar in our series that we've been running here at Giant, looking at all things relating to contingent hiring in Netherlands. We've got a good number of people registered today, so we're just going to wait a few seconds as people come into Teams and come into the session. A couple of little things from a tech perspective. First of all, we're definitely going to be keen on questions from you guys, so feel free to post the questions that you'd like me to pose to Jorgo and Charles in the Q&A function on the system. And also, you've got some options in terms of how you can view today's webinar. If you click on the view button within Teams, you can move to speakers or gallery, or you can play around with those options as well. So we've still got plenty of people coming in, so I'm just going to wait another 30 seconds or so, and then we'll start the session. Okay, so numbers starting to slow. We've still got a few people coming in, but I think we're probably in a good place to start. So, good afternoon, everyone. Welcome to today's session, looking at all things relation to hiring in the Netherlands, where we're going to take a bit of a deep dive, I suppose, looking at the VET DBA law within the Netherlands, which is the equivalent of IR 35 in the UK, and really having a look at what sort of enforcement actions taking place in the Netherlands, and what things you guys should be aware of from a compliance and a legal perspective when you're looking at placing contractors in the Netherlands. So I'm pleased to see that we've got a super large audience today with, I think, a good healthy mixture of recruitment businesses and end hirers from not just in the UK, but further afield as well. So over the next sort of 45 minutes, we'll take a look at considerations for businesses who are looking at engaging temporary workers in the Netherlands, with a specific focus on worker classification, which is always a hot topic in whichever country we're looking at, and how the Dutch government are looking at applying the DBA rules, and what increased enforcement action could look like looking at 2025 and beyond. So a little bit of scene setting, if I may, at the beginning here. Over the past decade, the number of freelancers working in the Netherlands has grown massively, by over 85% across that 10-year period. So numbers that we've seen from the Dutch Chamber of Commerce, or KVK, report 1.2 million self-employed people operating in the Netherlands. However, it's estimated that about 13% of self-employed individuals might be classified as falsely self-employed, particularly in sectors like the public sector, IT, media, and sort of telecoms arenas. So both the SIA and the Netherlands Times recently reported over 21,000 self-employed workers in the Netherlands closed down their businesses in December 2024, and that's a 54% increase from the previous year. So something's happening and brewing there to sort of be driving that behaviour and these closing of companies. And the KVK suspects that announcement that there's going to be more enforcement of the DBA rules from the 1st of January is behind this spike in closures. The December figures show that this was the first time that more freelancers actually quit than started. Over 14,000 people registered as self-employed in December, and that was, whilst it sounds a big number, that was a decrease of 13% over the prior month. So there's obviously movement in the Dutch market, and we're looking forward to Jorgo giving us some insight in what's happening on the ground. But with that enforcement action, we've also got acute shortages of available talent, not just in the Netherlands, but here in the UK, and obviously in many territories. And so with the tightening of the regulation, it'd be interesting now to see how that's going to play out in the Netherlands labour market. And we're going to try and give you guys some insight in that today. So the topics that we've planned to cover will be, firstly, the DBA Act, What is it and what's changing? How will the legislation be enforced? How do we anticipate the market reacting to those changes? How can companies reduce their risk and the available ways that workers can be engaged by companies? So what are the risk mitigation factors that people can look at? We'll also discuss the various types of providers who can help supply these workers, and if you consider outsourcing some of this risk, what options are available. So today's webinar is brought to you by Giant Group. We're a leading contingent workforce management company, helping businesses manage worker populations for both recruitment businesses, MSPs, and also end hirers, not just in the Netherlands and in the UK, but also globally. And also Osborne Clarke, an international law firm who advise on a wide range of matters, including employment, tax law, and all considerations involving the temporary labour market. So I'm delighted today to welcome our two keynote speakers today, Jorgo Tsiris. Jorgo is a partner at Osborne Clarke's Netherlands office. He's enjoying the sunshine in Amsterdam as we speak today, specialising in workforce solutions, cross-border projects, incentives, and corporate employment law. From Giant, we have Charles Daw, who is Sales Director for Giant Global. Charles spends his time focusing on helping clients access talent globally and compliantly using Giant Global's international payroll services. And his clients include UK recruitment businesses placing internationally, as well as end hirers that are based overseas who are looking at hiring globally. For those who haven't met before, I'm Dan Haslam. I'm Group Sales Director here at Giant, and I'm lucky enough to be the host for today's session. So what we'll do today, the format will be for Jorgo and Charles to address a number of set questions which I'll put to them. That'll try and steer us through the topics that we've got set today, and we'll try and give you some insight. Please do take advantage of the Q&A function to post your questions up throughout the session, and we'll return back to those at the end for about 15-20 minutes. So let us begin then with firstly looking at worker classification rules, or the VET-DBA legislation, and how that should be applied when considering tax status in the Netherlands. So Jorgo, good afternoon.
Hello, Dan. Hi, good to be here.
Hey there. Good to have you with us today, Jorgo. So could you give us a brief overview then of the legislation and how the Dutch government are looking to change their approach to enforcement?
Yes, I will do that. Yeah, I will start with repeating the three criteria that apply to any employment agreement, which is the first one is work, salary, and supervision. So if a worker, regardless how the worker has labeled itself, qualifies as doing work for a certain salary under supervision of the client, then the relationship is deemed to be an employment relationship. When classifying a worker as either an employee or a self-employed worker, most discussion will exist regarding the criterion of supervision that I just mentioned. This element is what actually distinguishes employees from self-employed workers. Self-employed workers may be given instructions regarding the end result of the work that is assigned to them, but these instructions must not be so extensive that it can be considered supervision over the way the work is performed and the worker sees that. If it does, it will be considered supervision, and the important criterion will then be fulfilled, and the worker might be qualified as an employee. As said, self-employed workers often work for user companies and users via intermediaries. In that case, practice shows that both the user company and the intermediate company are at risk of being qualified as an employer. Both parties should be aware of this qualification risk. An intermediate company may be seen as a temporary work agency, as we would say in Dutch, uitzend. The more involved an intermediary is in the performance of the agreement between a self-employed person and a user company, for example, facilitating invoicing payment, registering hours, absences, illness, etc., the higher the chances are that the intermediary might be labeled as an employer. The intermediary can then be considered to be a regular employer. It can also be qualified as a temporary work agency or even a payrolling agency. It does then not matter that the worker is self-employed. Case law shows that self-employed workers can be considered assigned by an agency to a user company as well.
Okay, thanks, Jorgo. That makes sense as a start on the legislation. And if we could go on now to look at how the Dutch government are changing their approach to the way that these rules are being enforced.
Yeah. So there is some misunderstanding because the law hasn't changed yet. The only thing that happened is that the tax authority stopped enforcing that same law because it was widely seen as unclear. There is new legislation coming, but that's not into force yet. It might not even become law. For the Dutch participants here, they might understand and even agree that it's quite uncertain times where we live in. It's not clear if the cabinet will stay in power. The overall political climate is not very stable, at least not in our view. For example, the Ministry of Finance has communicated openly that they will continue working with contractors, even though these might be falsely self-employed workers. That they even said that the ministry will pay any fines. So that to me says it all, that it's quite chaos at the moment. But the law hasn't changed. I think that's an important statement. And as I said earlier, back to 2016, the enforcement stopped by the Dutch tax authorities because it was deemed unclear, the law. What happened now is in January 25, a lot of people will know, the tax authorities announced that the enforcement would be reinforced and resumed. And there is a lot of documentation published by the Dutch tax authorities on how the enforcement would come about. There is an important document released on the 18th of December. It will be probably in the podcast notes because it contains all the relevant information for participants that want to know where to look for if the Dutch tax authorities would come and audit a certain company. What is clear is that even though the Dutch tax authorities will start visiting companies, no fines will be imposed in the initial year in 25. What actually is the case is that the Dutch tax authorities will always start with some sort of visiting and then will provide some guidance to the visited company how to structure its workforce going forward. So in sum, in 2025, enforcement rules have been resumed, allowing immediate corrections and tax assessments, but no fines. As I said, it will probably start with visit to companies and to discuss risks going forward. It's called soft landing. It's a soft landing. That's a word commonly used by officials. And only from 26 onwards, regular enforcement will resume. That might then also entail the imposition of fines. Then a final word about the model agreements. Good news for people using them, because when they are approved, they will remain valid until the end of 2029. But no new applications or extensions will be considered after 6 September 2020. So you can't really get a new model agreement approved. But as long as you're using model agreements that are approved, it provides some certainty against reclassification risks.
Okay, interesting then to see how the dial is shifting and this soft landing approach, and then perhaps some more enforcement from next year. So have you seen any early reactions then from employers in the Netherlands or any of your clients in conversations you've had with them in how they're reacting to the government's approach here, Jorgo?
Yeah. Yeah, so my personal view is that there is a lot of uncertainty, and you can read about that in the papers as well. But from a legal point of view, we see two things. Workers, so self-employed workers, choose to be employed, right? Choose between brackets maybe, or workers remain flexible, and parties seek for intermediaries to come in between to mitigate risks. In any case, and it's been advised by many for listeners to this podcast, it's really important, to the extent not already done, is to map out the complete flexible workforce that the company is currently using, because not every self-employed worker is, of course, the same. There is a lot of differences between those people. There is a tool actually on the website of the tax authorities that can be used as some sort of initial steer to assess contract relationships. It's not a bad tool, to be honest. But all in all, or at least I take the position that there are good grounds to stay put for a while and just see what will happen over the course of 25. As I said, there is a lot of chaos, a lot of unstableness. So I would probably advise to stay put and stay tuned on developments, unless, of course, your customers demand that you adapt your business model with immediate effect. Then there might not be a choice to wait. And we're not even sure what your customers are doing at this topic. But they might also be looking like companies as giants, Daniel.
Yeah, definitely. I mean, it's interesting you made the point around mapping your contingent workforce and understanding the whole piece there. I mean, our experience is many businesses do not have full visibility on exactly how many contractors they're engaged, because they're often hidden in different types of working arrangements, and that is an exercise in itself. But I mean, it's super interesting to hear what's happening in the Netherlands. There's certainly few parallels in terms of what we have had over in the UK from an IR35 perspective. For example, you mentioned the online tool. We've obviously got the equivalent CEST tool in the UK that tries to give a steer on what how someone should be classified and payroll. But it's, as you know, no exact science. I think if we look at what happened in the UK with the enforcement of the regulations here, there was a lot of change quite quickly, because it certainly wasn't a soft landing. It was quite a hard landing, with a position being, from a date, there's liability. And that, of course, drove massive changes in behaviour. At the moment, for our clients, where they've got workers in the Netherlands, I think we're aligned with you, actually, which is there's no need to panic here. Let's see how the year plays out. But maybe it's a good time to start doing some audit work, looking at your populations, and again, Giant can offer those services to make sure that you've got a bit more clarity on exactly what contractors you have, and then you can start looking at how you might be able to mitigate some of the risk. So thanks, Jorgo. Charles, it'd be good to bring you in here if you can give us a little bit of insight in what your clients have been saying about the changes and their appetite to continue to hire contractors in the Netherlands.
Yeah, for sure. I think when we started to talk to clients about the change in enforcement towards the end of last year, the first reaction was that it wasn't widely known about. Many of the UK recruitment agencies we spoke to weren't aware that there was going to be more of a focus by the Dutch authorities in this area, and that the moratorium was actually coming to an end. And I guess it was really not something that was widely advertised by the authorities to overseas companies. So no real surprise there. I guess the next reaction was what you would expect: a little bit of denial. It wouldn't affect them, and so just continue working as they normally do. But what we kind of went through was a process of following up with links to articles about the changes, and then I think people started to realise that it was a significant change, and that there were areas that might need to be addressed. I mean, I would say that, though, that the Netherlands has always been a little different to many countries in Europe, in that they've had the chain law in place for a long time that holds everyone within the contract chain jointly liable for the payment of tax of a contractor. And this has meant that there's been, I guess, more of a leaning towards the employment model compared to other countries. And also they had incentives like the 30% ruling that made using the employed model for non-Dutch nationals more inviting. So I think the split between what we call EOR and AOR has always been a little bit more even in the Netherlands compared to perhaps some other countries in Europe. But I think this change will certainly move the dial perhaps a little further towards the EOR models.
Yeah, no, that seems to be a fair conclusion. And certainly there's been no less demand, I don't think, for contractors and freelancers in the Netherlands. It's always a hotbed of contractor activity. And I don't think we're going to see that necessarily changing with these rules, but we just need to keep an eye on how the market does react. And I think that's interesting and a good segue, Charles, when you mentioned EOR and AOR, to look at our next topic, which is practical ways that businesses can look at reducing their risk. So if I stay with you, Charles, how are you advising your clients to help them to reduce their risk here and on these misclassification topics?
Yeah, sure. So I think the first point to really consider is the way that an end client is going to engage the contract resource. So actually interrogate, is this a truly independent contractor? Is there a level of perhaps supervision, like Jorgo was talking about, that would put them more squarely in the employment bracket? So, not just taking the word of the contractor when they say they've got their self-employed registration in place and that's how they've always worked. You've actually got to do some interrogation into the reality of what will take place on site. And similarly, obviously, Jorgo mentioned the online questionnaire in the Netherlands, but we've actually put together a questionnaire ourselves that can help to give some clarity or some guidance, at least, of which type of solution should be used. But I would say that the caveat is always that it'll be the reality of what's happening on site as opposed to the answers on a questionnaire that the authorities are going to look at. The way to I guess, maybe reduce or mitigate the risk of reclassification is to consider the employment model. With an EOR service, essentially the Dutch government would be receiving full employment contributions, the contractor having all the taxes deducted at source and paid directly to the authorities. So there's kind of no wiggle room there. A bit of a almost like a belt and braces solution that would kind of take away the risk of reclassification.
Yeah, no, absolutely. I suppose the other side to that coin is obviously commercially then there are additional costs with those taxes coming through, and that's always the balance that people are making here. But interesting that people tend in the Netherlands to lean into those employed solutions just to mitigate risk, basically. So super interesting. Thanks, Charles. Jorgo, it would be good to sort of pose the same question to you. What advice would you give to people on the call today for practical tips on how they can help reduce compliance risks in this area?
Yeah. So as we said earlier, the sentiment is clearly focused on limiting working with self-employed workers, at least in the Netherlands, especially when these workers perform work that can be considered as core activity of the company. So that's always in the background. But let's assume that you want to keep working with self-employed workers, and it remains popular in all sorts of sectors because of the flexibility that goes along. Then what we always say is look at the contracts. What do you agree with the contractor when things go wrong? What happens if the tax authorities come and audit and reclassify the relationship, who's going to pay the bill, right? And to a certain extent, it's possible within the contract between the company and the self-employed worker to add what we call indemnification clauses, actually meaning who is paying the bill. And that's always a really relevant clause to have in. That also accounts for the intermediary, if there is an intermediary involved, so that it's a three-party relationship. Also, the intermediary can, on its term, include such an indemnification in the agreement. But as we said, to a certain extent, for example, premiums that an employer is supposed to pay cannot be reclaimed from the reclassified worker. But taxes, for example, can be reclaimed. So it's really advisable to have that in that clause. Other stuff is the due diligence on the front. Who are you dealing with? I think Charles already said that. But it's really important to have the contractor registered as such, as an entrepreneur in the Chamber of Commerce. Contractors send invoices with VAT included. It's clear that in the absence of a model agreement which is approved, then still the agreement used doesn't need to look too much like an employment agreement. So that means that it must contain clauses that make clear that the contractor has some sort of authority, right, to do the work as he or she fits that it needs to be done. The freedom to work also for other parties is a relevant clause, and the instruction power shouldn't be that great. The contractor should have a lot of freedom to actually do the work as he or she fits. Then there is a final point is the supplies being used to carry out the work, typically laptops, phones, etc. It's better to have the contractor pay themselves for that rather than getting a company paid phone or laptop. Same applies to email addresses and other company property. It's better not to give that away to the contractor if you want to stay away from requalification risks. Now, we already talked about the embeddment in the agreement in the company. That's a really important element of looking at this, and that's basically what I wanted to say on this now.
Yeah, I think we'll all be familiar with some of those themes, Jorgo, not being part and parcel of an organization, making sure that, you're in control of how you operate the work and not the client. There's certainly common themes across all countries when we're looking at employment risk here. But, as we all know, one contract can say one thing and it's what's happening on the ground. And that's just as important to make sure that you're assessing that situation and making the right decisions. So thanks, Jorgo, for that brief. Charles, it'd be interesting then just come back round to yourself here and just ask what are the typical behaviours that you see from payroll businesses on classification. There obviously been a big rise in employer of record type solutions, not least with Giant. So it'd be interesting to get your views on how you see those sorts of companies dealing with classification.
Yeah, it's an interesting one, Dan, because I guess if you go back, 5-10 years, then self-employed was really the main way of working for contractors, really across the whole of Europe. But we've definitely seen more and more governments bring in legislation to move towards, to move workers towards the kind of employed option. And of course, look, the main reason behind that is that a government's going to collect more tax and social security from an employed solution compared to a self-employed. As has been mentioned, over here we had the IR35 legislation, and we had the IR35 test to establish how someone should be engaged. So what we did, we used that as a basis. We used other legislations like WAB in the Netherlands, like AUG in Germany. We also used some AI tools as well to basically put together an international version of an IR35 test for international contractors. Now, again, none of this is kind of a legally binding document in any way, but it's meant to just give a really good guide to someone, so you can see should they really be engaged as a freelancer or an independent contractor or via an employed model. So I guess what we're doing to try and help is to put that extra layer of due diligence into assessing how to engage a contingent worker. As I say, if you go back 5-10 years, that sort of thing just wasn't even thought about or talked about very much. It would just be, what is the the cheapest and most efficient way of getting someone paid. Whereas by following this kind of due diligence process, even if there was a case of reclassification, you can at least hang your hat on the fact that you followed a process and you came to a solution on the basis of asking some informed questions about the engagement type.
Yeah, well, I think just general comment here is that we don't see any diminishing appetite for businesses to use temporary workers. All the stats globally report that contingent workforce is on the rise. But of course, what's happening here is that the governments are trying to catch up quickly with what's happening on the ground. And so eventually, I suppose it was inevitable that you'd see some of this enforcement activity coming through. It just happens to be sooner in some countries than others. So great. Thanks, Charles, for your insight there. So now let's move on to look at ways in which a worker can be engaged, the different types of suppliers who can provide these workers to organisations. And Charles, if I can continue with you here, can you tell us a little bit more about the services that are provided by employer of record and agents of record companies like Giant Global, and how you can help your clients engage these workers compliantly?
Yeah, for sure. And I think just on that last point you were making there does seem to be a little bit of a battle going on at the moment, almost, in that you do have kind of countries wanting to bring in legislation to say, put people in a PAYE box almost here, and on the opposite side you've got a workforce that says, I want to be independent, I want to have freedom of movement, freedom of work, and all this sort of thing. So you do have kind of a couple of opposing forces happening at the moment, and it just comes down to each individual country as to how they're looking to manage that. So talking about EOR and AOR, I guess, so an EOR service is an employed option, really straightforward. The worker has an employment contract, could be open-ended, could be fixed term. Each month there'll be a payroll run. The worker would receive a net pay along with a pay slip, all taxes deducted at source, all employer costs paid direct to the local authorities, and the worker is really just able to focus on the work while all the admin associated with being paid is kind of taken care of for them. And then with the AOR service, this is where the worker's operating as perhaps self-employed or through a limited company. With this type of solution, the worker would receive essentially a gross payment, and then it would be part of their responsibilities to deal with the payment of taxes and social security directly to the authorities themselves. So a little bit more kind of admin involved, I guess, with an AOR solution compared to the EOR. But then obviously on the payoff side, an employed solution does mean that then you have to account for things like employer costs and employee rights, holiday pay, sick pay, etc. So retentions could vary between the two types of structure.
And are there any other types of structures or engagements that you'd flag to the audience?
So I think generally speaking, we try and use EOR and AOR as a bit of a catch-all for everything. But there could be, within AOR, you could have company to company or corp to corp, as they call it in the US. You could have a BVBA, a BV sole trader, or ZZP in the Netherlands. You can also have directly sourced or subcontracted or consultancy agreements. So I guess essentially there are a wide range of different types of engagement that are out there, and what we've tried to do is just kind of break it down to a couple of simple acronyms. EOR basically meaning anything that is an employment structure, and AOR being the catch-all for anything that is not employment.
Great, thanks, Charles. So it'd be good to hear from Jorgo then, I think, also on this, and your views, Jorgo, on worker engagement types and considerations as well. So if you could give us a brief there.
Yeah. And maybe to stay in Charles, his words. So the EOR, the employed option, has actually two flavors then, right? If you ask me, it's the temporary work agency where the intermediary is employing the worker and assigning the worker to the end user. So that would be flavor one, I guess, in the employed option. And the other one is payrolling, which is more or less the same, but payrolling, it's different than temporary agency work, because payrolling is deemed to be a more long-term relationship, right? Rather than temporary work. Agency typically is seen as temporary and quick, where payrolling would be a much longer-term relationship. But those are the two legal flavors within the employment option. And in the other option, the not employed option, there is the straightaway self-employed worker relationship, as we talked about. You can call that contracting. There's lots of names for that. But as you said, Charles, the core definition is it's not employed, and not employed workers. So self-employed workers can also be assigned by intermediaries, right? Like Giant even. And the platform economy is I guess, very illustrates very clearly that a lot of workers are actually placed by an intermediary. Think of Uber, think of other Deliveroo, that kind of platforms use the non-employed option.
Yeah, no, I think that's it's definitely relevant to mention it. I forget the exact numbers now, but if you look at Europe and you look at the number of workers that operate in this gig economy working through platforms, it's huge. And the amount of growth that's being forecast by the end of the decade, you're looking at an almost doubling up of the number of people that are engaged in that way. And of course, a lot of those platforms historically haven't considered things like misclassification. And so, they'll have to get a little bit more sophisticated in those models to make sure that they are abiding by the legislation, certainly where these platforms operate in different countries. So let's move on then to the final section of today's webinar. A quick reminder to everyone, if you haven't already, and we've already got lots of questions stacked up in the Q&A, please do put those in, and we'll try and get through as many of those at the latter end of the session. But for the last part here, I just wanted to discuss the responsibilities and compliance requirements that are in place in the Netherlands now for the types of providers of workers. And you've mentioned a few already, Jorgo, but I'm thinking specifically recruitment businesses or payroll providers, or even recruitment platforms that supply workers. Can you just explain, what the requirements are from a compliance perspective and what the options are in the Netherlands?
Yeah. So there is a lot of legislation about that. So the companies that actually are active, so that are providing workers to third parties, these kind of companies need to be first of all registered as such in the Dutch Trade Register. Very clear description of that the core business is providing workers to third parties, because it's forbidden for hiring companies to do business with companies that are not registered. So that's one. The second one is that user companies can be held liable for payment of wages and taxes and social premiums over these wages when the employer of the worker lacks to pay these, right? So, for example, if you would do business with an uncredible provider of workers, and that company would go bust, right? The hiring company is on the hook for payment of these kind of employment liabilities. So it's important to know with whom you do business. For user companies, it's therefore useful to check whether these agencies that we talked about are registered in the so-called SNA register. SNA is some sort of it means that the company has fulfilled a lot of requirements to do proper business, so to speak. As I said, the registration indicates that the agency fulfills its payment obligations. And for agencies, so for the companies that provide workers, it's advisable to have this SNA registration for a number of reasons. And most of the time, your clients will even demand it in the commercial contracts to have that. User companies can be exempted from the liability regarding taxes and premiums by paying a percentage of the invoice to a special account of the agency, the so-called G account. The agency must then also have a SNA registration, and additional administrative requirements must be met. That's another way to make sure that that payments are actually being made to the workers that are concerned. Really important within Europe, but also within the Netherlands, there are a lot of equal treatment provisions. So that means actually that temporary agency workers must be equally treated as regular employees that are employed by the hiring company. Based on these provisions, temporary agency workers must be paid the same salary as employees of the user company performing comparable work. That's important. It needs to be about comparable work. In the Netherlands, there is a collective labor agreement applicable to temporary agency workers, which is called the ABU CLA. And in that CLA, there is also a regulation about equal pay. And finally, there is also a pension fund applicable to staffing workers. Same applies more or less. So the equal pay that I just mentioned to payrolled employees, which is a subform of temporary agency employees, except for pension. Okay, but that's quite technical. So for payroll employees, the same applies, same salary, same other benefits as the regular employee. Yeah, there is a lot to say about payroll, but I probably will leave that because I think it's too technical for this audience, and I'm really looking forward also to the Q&A session then. So I'll leave it.
You've had a little dip into that Q&A and seen how much work you've got to do at the back end of this session, Jorgo. It's busy. But I think the bits and pieces you were highlighting there, we'd refer to it on as the sort of AWR rules in EU respect as well. So I think there's some familiarity with some of the premises there. But yeah, let's keep moving forward and we will get stuck into these questions. Charles, from your perspective, then it's obviously going to be quite challenging for you to manage all these different rules in the various countries that you operate in. Just tell us a little bit more about how you and the other payroll providers trying to address those complexities, and I think then we'll move into the questions.
Yeah, for sure. Definitely challenging. And it's a combination. You know, we have our own internal team who are kind of experienced in international payment solutions. Obviously at Giant, we have our proprietary software as well that allows us to deliver our services globally. But we also have our network of specialists, like people like Jorgo, Osborne Clarke, who are based locally in each of the countries in which we operate. So they're able to kind of feedback information to our team when things are changing so that we can then formulate how we need to adapt our offerings to make sure that we kind of continue to provide compliant solutions to our clients. So, you know, case in point that we've been talking about today, you know, a change in the way that a piece of legislation is being perhaps not a change in the legislation, but a change in the way the legislation is being enforced, and that's kind of fed back through to us, and then we take that information out to our client base and look to formulate the best way to move forward. So I would say it's one of the key aspects of us being able to operate in multiple countries is having our kind of our trusted partners like our colleagues at Osborne Clarke.
Fantastic. Thank you both for going through that. That's the sort of end of the formal section here of the topics that we wanted to cover. I think it's going to be super interesting to see how things develop in the Netherlands, and perhaps Jorgo, there's another webinar in it for us a little bit further down the track as the reaction from the market matures and we can get a sense of exactly what's going on there. So thank you both for your insight, super helpful. We've got lots of questions, so let's, for the remaining 15 minutes or so, see how many of these questions we can run through. So thank you everyone for submitting. I'll start at the bottom and just sort of start working up. So a question from John. Can I ask, is there a dispensation for construction workers and self-employment in the Netherlands, similar to CIS in the UK? So Jorgo, in the UK, we have something called the Construction Industry Scheme, which is a simplified payroll arrangement for construction workers. Is there anything you're aware of in the Netherlands that's similar?
No, I'm not aware of that.
Okay, good. So then therefore we just assume the construction is the same as every other sector, and those rules apply. I know when we did a session on Ireland, they had a sort of version of a construction arrangement over there, but not for the Netherlands. So that's helpful to know. Second question from Anna Marie. Hi, Anna Marie. The intermediary/temporary work agency, can this include the recruitment company? Yeah. So would you say, Jorgo, a recruitment company could be defined as an intermediary/temporary work agency? Yeah, I'd assume you'd agree with that statement.
Yeah.
Fine. Good. So far, so good, Jorgo. Nothing too tricky for you yet, but we'll wait and see. What would be Nick, question from Nick, what would be the impact in the Netherlands if the government deemed recruiters as the employer for tax purposes instead of the intermediary? I ask because the UK government have announced they're doing this. So speculative, but what would be the impact if the Dutch authorities decided that the recruitment businesses should be the employer for tax purposes? Any views on that?
Yeah, so but you can only be an employer if you actually are paying the worker. So the classic recruitment could also mean that there is just a matchmaking project, and then the recruiter steps out, right? That can never be an employment relationship. So there must always be an element of assigning workers to the client.
Yeah.
But yeah, when it happens, and it means that then, in this example, the recruitment company assumes full responsibilities in terms of payment of employment liabilities in its widest range.
Yeah, and this is a topic that's very interesting to those in the UK, because as we've spoken about, there's a consultation at the moment that potentially moves that tax liability from the payroll providers up, and that's a reaction to the perception of non-compliant payroll activity that happens in the UK. And just a reminder to you, Nick, and the audience, I'm actually doing a webinar next Tuesday on that particular topic. So if you want a deeper dive on that, then please join us next Tuesday. We'll talk about the Employment Rights Bill and also the umbrella consultation. Okay,
Dan,
so
I was
yes,
so
sorry.
I put my hand up, Dan, on the button. I was also just going to highlight there that ultimately in the Netherlands, you've already got chain law, so everybody within the contract chain is jointly liable for the tax of that individual anyway. So in a way, they've kind of already addressed it. You know, if you are a recruitment agency sitting in the contract chain between, say, an intermediary like Giant doing the payroll and your end client on the other side, you're all jointly liable for the tax of that individual as of right now. So they probably don't need to change their laws in the way that we're looking at over here in the UK at the moment.
Yeah, fantastic. Well said, Charles. Yeah, that certainly changes the risk appetite for people to do anything too creative if everyone in the chain is liable. So excellent point. Okay, so I don't know if it's a question or an observation, but a comment from Bill. I don't mean to downplay the risk, but in practical terms, do the Dutch tax authorities have the resources and manpower to effectively enforce worker classification regulations for misclassified freelancers? That's the question. Several Netherlands-based suppliers I've spoken with suggest enforcement is limited. So what's your view on that, Jorgo?
In this audience, I tend to agree that time will tell, but the tax authorities are not known for its major resources on this point. But as a lawyer, we are not allowed to, we're not supposed to advise on chances of being caught. But I'm happy to admit to that, because it's a fact that the tax authorities didn't recruit like 1,000 inspectors to do all the work. I think it's just a bunch of people, and they will have to make their choices. And what they will do, and they communicated that, they will look after the high-risk sectors first, right? So, for example, low-paid immigrants from out of Poland or Romania. These people get underpaid, they get abused, all these kind of things. So I can imagine that if I were an inspector, I would start looking there rather than chasing high-paid IT or other highly qualified workers.
Okay, interesting. Yeah, you get a sense that it might be the blue-collar type sectors where some action might take place. But yeah, I think Bill makes a good point. you spend your money, you take your chance. You can obviously take the risk, but we're here today to advise people on what the risks are and how to mitigate those. And everyone has a different risk appetite. Certainly in the UK, we've heard our government promoting the vast amounts of money they're pumping into the tax authorities to increase the amount of enforcement that's coming along. And that was actually reinforced in the spring statement that we had yesterday. Hey, Carla, question from you. Is there an assessment that an agency can do, similar to IR35 assessment, to determine the level of supervision to ensure we are not engaging with a hidden employee? So Jorgo, I'd assume you'd refer back to that online tool, right?
Yeah, that's a good start at least. It's
Yeah.
a good start, yeah. And it's in the notes, right? The exact the web page of that. It's on the web page of the tax authorities.
Okay, fantastic. Thanks for that question, Carla. Next question, is the employee self-employed person distinction, especially about supervision instruction, also applicable for EU countries in general, or is this only specific to the Netherlands?
No,
I would say that's a general rule across all countries, right? That supervision, direction, and control is a theme everywhere. And I think a lot of what you've been through there, Jorgo, we see repeated in the US, we see it repeated in the UK. They're all the similar sort of points: mutuality of obligation, obligation to offer work and it to be accepted, how many clients you work for, supervision, direction, and control. What element of risk are you taking, which you referred to in your section in the contract? Is there any risk being taken? How part and parcel of the organisation people are. So don't think there was anything unique there, you'd say, in terms of how the Netherlands look at this?
No. We're part of the EU, and the EU is a
Stop showing off to your UK colleagues, Jorgo. You're jealous.
The EU is one big legislation bunch of countries. So the definition of employee, to someone who works for pay under supervision, is more or less fixed. You can't say as a country that to say we don't define employees as employees just to get rid of all these taxes and stuff. So it's quite a unilateral definition of an employee within the EU.
Yeah. Super. Okay, thank you. Joanna, question from you. I have noticed an increase of applications of freelancers, contractors for permanent roles, even claiming that they are ready to suspend their own business. Nevertheless, when they are counter-offered a freelancing contract, the majority of them choose to continue as a contractor. Interesting. Obviously, I spoke about that in the introduction there, Joanna, the fact that there's been a big reduction in the number of people that have companies set up in the Netherlands. So there's something moving around there in the workforce. But I don't know, Jorgo, if you're seeing anything on the ground there in terms of worker behaviour that you would share with the audience.
No, I tend to agree with this question or this observation. That my observation is that when people have a choice as self-employed workers, they want to do that. They continue doing that, right? Unless your client or your customer is demanding something else, right? I totally agree with with that observation.
Okay.
Yeah, I think, Dan, it's so I was going to say it's that kind of when push comes to shove, isn't it? And the financial reality of perhaps taking an employed position against being able to work self-employed, and it's often the case the self-employed infrastructure is going to put more money in the pocket of the worker, and when they weigh up the two, they go for the money. That's often the way, isn't it?
I suppose there's also another dynamic here as well, Charles, where given many companies across Europe are making redundancies, then these freelancers probably also are quite attracted to an employed role that gives them a little bit more stability. And so it's weighing up the benefit of a more stable employed position versus, the take-home pay aspect. Staying with you, Charles, on this next one for your view, for a question from Dean. What is the risk of an English limited company agency providing, for example, this is a tricky one I've posed to you, a Romanian tax resident contractor who is working 100% remotely to a Dutch customer? So let's break that down. We've got an English-based recruitment business providing a Romanian tax resident contractor who's working remotely for a Dutch customer. What's the risk there for the recruitment business?
So obviously, it all depends on the setup that you go for and how you structure the contracts and the engagement. I think for me, the key thing has always been the physical location of the worker. So where that individual is physically based, that's going to dictate where a tax liability is generated. So if you've got a guy in Romania, physically working in Romania, that's where the tax liability is created. Even if those services are being delivered to an end client in the Netherlands, and Jorgo, you can correct me if I'm wrong here, but I don't believe there would be any tax liability in the Netherlands for that. It would be in Romania. So as long as you look at using a compliant Romanian tax solution, I think you're safe and you're covered there.
Agreed.
Okay, good. Next question from Anna Maria. What about if recruitment companies are registered in the UK? Question mark. You mentioned they need to register within the Dutch trade register. So yeah, so I think Jorgo, you covered this. If there's a UK recruitment business registered in the UK that wants to do recruitment in the Netherlands, they've got to do some registrations, right?
Yeah, but that's not that difficult. So that's easy to do. There is legislation coming up, but it's not law yet, where there would be much more to it for a UK company or a company from out of Europe to do business in the Netherlands. We actually going back to the good old licensing system. So there is more to come on this. But nowadays, at this moment in time, it's just a registration in the Chamber of Commerce that's filling out a form.
Okay, wonderful. Thank you. Question from Emma. Hi, Emma. You say it's forbidden for a third party to engage with a non-registered agency. Is this just to provide employed workers, or does an agency also have to be present, i.e., have an entity in the Netherlands to provide self-employed workers?
No entity required. Could also be a UK.
Yep.
Yeah.
Okay, so the entity is required if it's employed workers being supplied, but if it's non-employed, not a challenge.
No, there is never an entity required.
Okay. Okay, good. Let's move on then. Question from Siobhan. Does a foreign company need an NEN number as an agency in the Netherlands, or only Dutch companies? Also, well, let's answer that one first, Jorgo, and then we'll move on to the second.
NEN, which is the SNA that we talked about,
yeah.
That's not a requirement. It's only best practice.
Okay.
So the answer then is no, there is no requirement for a UK company to do that. But most of your customers will ask you, do you have one?
Yeah. So they see that as standard operating practice, basically. Yeah. Okay. Bear with me 1 second. So then that question, Siobhan then goes on to say, also, if employed via employer of record, do they have to be processed as a Phase A worker, FASEA worker, as the employment costs build up is much higher as an agency?
Yeah, so Phase A, that comes from out of the CLA, the collective labor agreement, applicable to staffing agencies. So if this EOR, because that was the definition, if that qualifies as a staffing agency, then you end up with this CLA, which contains all these phases. But it depends on the first question is in this question the EOR identical to a staffing business or not?
Okay, there we go. Great answer. Thanks, Jorgo. Question from Linda. Will limiting the project to a max of 12 months for ZZP mitigate the risk of misclassification? So we understand contract lengths can be a bearing on whether someone's employed or not. So would limiting a freelancer, ZZP, or sole trader, as we call them in the UK, to a max of 12 months mitigate the risk of misclassification?
Yeah, I would say yes, based on that it's a short time, right? If you would hire someone for 10 years, obviously there is more risk of getting audited than in a 1 year time frame. So from out of that angle, I'm happy to say yes to that question.
Yeah, it would mitigate it, but we should bear in mind that's just one factor, right? There are many other factors that could influence it. So I think time for one last. Oh, sorry,
Oh,
Charles.
sorry, Dan.
Yeah.
I was just going to add there to say that the reality is that one individual getting investigated is highly unlikely. I imagine what the tax authorities will do will look to investigate companies that have a large contractor base, and so then they'll look at then each individual that is engaged by that end hirer. And so, although it might only be a 12-month contract, if they get wrapped up into a bigger investigation, then they'll look at the reality of the day-to-day working practices. And if they are under the supervision, direction, and control of the end hire, then they could still be reclassified, even if they've got a 12-month contract. So I think the one individual getting caught, highly unlikely with a 12-month contract. But if the company gets looked at, then they could get wrapped up in a bigger investigation.
Yeah.
Super. Okay, good. Well, listen, guys, we've come to time now in terms of what we had for the session. The Q&A is still coming through. We could have probably done another half an hour on all that, but it's great to see everyone engaged, and I think they've really appreciated the input there. We'll try and take some of the remaining questions, and if we can get answers to that, we'll put that into the follow-up so that you guys can have that along with the recording. So finally, thanks, Charles. Thanks, Jorgo, for today. I think that was fantastic. Thank you, everyone, for joining, and we look forward to seeing you on the next one.
Okay.
Cheers.
Bye-bye.
Cheers for now.
Cheers. Bye-bye.